everyone. Welcome back to In Her Wallet, a weekly podcast helping women around the world take control of their finances for good and build better financial futures one episode at a time. My name is Sofiia. I'm your host, the founder of In Her Wallet, and an accredited investment representative here in Canada. Today is Friday, a long weekend, a good Friday. Easter is ahead. I hope you guys are all having a good mood and have something exciting planned for the weekend. Friday also means that it's time for a solo episode, an episode where I get to address any questions about personal finance or investing you guys have. If you, by the way, have a question you'd like to submit, feel free to send it to me in Instagram through In Her Wallet podcast page or my personal page. Either way, you probably already know what we're talking about today from the episode title. It's Can you use Chat GPT to evaluate stocks for investments? And the short answer is yes, you can. And to be honest with you, it's pretty impressive what that thing can do. But before I give you more details on how to leverage ChatGPT for your investment portfolio, let me lay the ground for what information you need in general when evaluating company stocks and finding out and trying to figure out whether that's a good fit for your investment or not. When you're thinking about investing in a company stock, there are a few things you need to consider. I like to break it down into 6 categories, including companies' financials, including companies' management and leadership, companies' valuation, which is understanding whether the stock is undervalued or overvalued. It's understanding industry and market trends, then analyzing any news or events that might affect the stock price, and finally, looking at competition and changing market conditions. All of this might sound pretty straightforward to you, but let me give you a few spicy tips on how you can leverage ChatGPT when evaluating each of these. I'm going to be bold and assume that you have a basic level of knowledge when it comes to investing into the stock market, so I'm going to do my best to simplify things as much as possible when explaining these. First off, company financials. These are the core of your analysis when analyzing a stock. Company financials are a set of documents that provide information about companies' financial health and performance. The goal with looking at these statements is to understand how much money the company is making and how much money it's spending. And why we want to do that is to understand whether the company is profitable or not and whether it's good at managing its own money. There are 3 key financial documents that you will come across when evaluating any company. It's income statement, balance sheet, and a cash flow statement. If you're new to investing, you might start feeling overwhelmed now that I'm starting to pronounce and say all these professional definitions. But trust me when I say that you do not need to have a PhD in statistics in order to be able to evaluate stocks. So, while I know that all of these statements carry a lot of important information, I want to simplify things for you, as I mentioned. And that's the reason why I want to zone in on 5 key metrics from these financial statements you can ask ChatGPT about to evaluate a stock. And the first metric is revenue. That is the total amount of money the company makes from selling their products or services. A company with strong revenue growth over time is generally considered healthy, and it shows that the company is successfully selling their products or services. Second is gross profit margin, and this is the percentage of revenue that remains after subtracting the cost of goods sold, which is the amount of money that companies spent on manufacturing and producing the products that they are now selling. A higher gross profit margin indicates that the company is able to produce its products or services at a lower cost than their competitors, which can be seen as a competitive advantage. Third is net profit margin, and this is taking it a notch further from gross profit margin by also subtracting not only cost of goods sold, but now taxes and any interest the company owns on the debts. A higher net profit margin indicates that the company is generating more profit per every dollar of revenue, which is generally a good sign. However, you do need to consider other factors like debt and operating expenses, as these things can affect and impact companies' profitability over time. We only have two metrics left. It's return on equity and return on assets. When it comes to return on assets, this is the percentage of profit the company earns for every dollar of assets it owns. Imagine a company like Amazon, they own a lot of factories, a lot of machinery, a lot of transportation vehicles for deliveries. So that means that for all these physical assets that they own, how effectively are they using them and how much revenue are they generating for every dollar of that asset. And last but not least is the return on equity. This is the percentage of profit the company earns for every dollar of equity it has. A higher return on equity generally indicates that the company is generating more profit per dollar of shareholder equity, which means the money that investors put into the company, which generally is considered favorable. So it's important to compare all of these five key metrics to industry norms and also to companies' historical performance over time. Again, I just named five key metrics, and I hope you guys can key in these metrics into ChatGPT when evaluating any company. Okay, so this was all about financials, and I promise this was the longest explanation of all six categories. Let's move on. The second category I want you to zone in on is understanding the industry and market trends when evaluating a company and its stock. The way you can leverage ChatGPT here is by asking what kind of industry the company is in and whether that industry is growing or it's shrinking. This can help you understand whether the company has potential for future growth, which is important for us as long term investors. And when it comes to evaluating market trends, which is broader macroeconomic trends, here are a few things you can look at. It's the economy in which this company operates. For example, it's a Canadian company, so we need to look at inflation, interest rates, GDP growth. Then consumer behavior and trends. Are people, willing to spend money easily right now, or are they being more frugal? Third, political and geopolitical events, global events as we're seeing right now happening. And last but not least, industry specific trends such as mergers and acquisitions and new product launches. By analyzing the industry and market trends, in addition to the company's financials, you can get a more comprehensive understanding of the stock's potential risk and rewards and make more informed decision. Now, let's move on to the third category. The third category, by far, is one of my favorite when it comes to leveraging ChatGPT, and it's understanding how the management and leadership of the company are performing. Namely, you should look who is running the company and their experience, because this can help you understand if the company is being managed well. For example, if you are evaluating a Tesla stock, some of the questions that you can ask ChatGPT are: who are the leaders of the company and what is their track record? What is the company's leadership philosophy and culture? How does the company attract, retain, and develop talent? How does company communicate with their stakeholders? By asking all of these questions, you can better research and get deeper understanding of the company's leadership and its potential impact on the stock's performance. Next category is analyzing companies' valuation metrics to determine whether the stock is undervalued or overvalued. Price to earnings ratio, price to book ratio, and price to sales ratio are the three key metrics that you can ask ChatGPT about to understand whether the company is doing good or not. As I mentioned before, it's very important to compare the company you're considering for investment to its industry peers. As in our case with Tesla, if I were you and I was understanding their ratios in ChatGPT, I would ask it the same key metrics from their competitors. And as for Tesla, it would be traditional automakers and other EV startups. We have the last two categories to go over, and that's companies' catalysts and risks and challenges. So let's start off with catalysts. What is that? Catalysts are any upcoming news or events that can affect stock's price. To give you an example of an event that affected a stock price, and again, let's look at Tesla, is an announcement made on March 8th in 2020, one that Tesla had invested $1.5 billion in Bitcoin and would begin accepting payments in cryptocurrency for its products. This news caused a surge in price of Bitcoin and in turn also had a positive impact on Tesla's stock. However, just 2 months later, Mr. Musk decided to change things up and said that Tesla would suspend using Bitcoin and suspend accepting Bitcoin as a form of payment due to environmental concerns surrounding Bitcoin mining. This caused a drop in price of Bitcoin and also had a negative impact on Tesla stock. So when evaluating a stock for investment, you should consider whether there are any upcoming events or news that could affect company stock, as well as new product launches or changes in regulations. And one final category I want you to focus on and use ChatGPT for is understanding risks and challenges. You might be thinking, Sophia, isn't that everything we've just done? Kind of, but this last category actually focuses on competition and changing market conditions. And I want to illustrate this category with an example so we get a better idea. Let's look at Blockbuster, a once dominant video retailer chain. Blockbuster enjoyed a monopoly in the video rental space market for years, but unfortunately, it failed to recognize the rapid changes happening in the industry, such as the shift to digital media and the rise of streaming services. And that's really when Netflix took over, the streaming service that we all use these days. By the time, unfortunately, Blockbuster realized what had happened, it was too late and they filed for bankruptcy. This example illustrates the risks of investing in a company that is operating in a rapidly changing industry or market. When investing in such companies, it's very important to assess the competitive landscape and the potential impact of new technologies and disruptive business models that might enter the market. Companies that are slow to adapt, as happened with a Blockbuster, or deny adapting to new technologies, unfortunately risk being overtaken by more nimble companies. How you can use ChatGPT to evaluate the risks and market conditions category is by asking it what is happening in the industry? What are the latest news? What are the latest companies or startups trying to disrupt this space? Well, that was it. I hope you guys enjoyed this episode and found it useful and now know how you can use ChatGPT's incredible technology to your own advantage when investing. If you feel a bit overwhelmed and feel like you might need to listen to this episode twice, I don't blame you. It's totally fine. The one thing I want you to do though is to give yourself credit for showing up for yourself and your future, because every time you do so, you increase what's financially possible for you. I thank you all for tuning in today, and I look forward to seeing you next week.